Welcome back to Bazaar Morning Call. Hemang Jani is joining in now to tell us how to approach the markets. Hemang, thanks for being with us. You know, there was a sharp slide that we saw in mid and small caps yesterday. But what do you do now if you're holding on to these names, whether it's in railway, defense, sugar stocks, PSUs? Do you keep the faith or do you start booking profits?
Morning, Sonia. I think we've seen a very strong rally in the mid cap and the small cap stocks, and the index itself year till date is up about 32%. So while we are rejoicing this entire rally across the broader spectrum as you outlined, you do go through a little bit of corrections on the way because both in terms of valuations, in terms of liquidity chase. The kind of money which is moving into the small cap and mid cap oriented funds actually has doubled in the last 2 months. 45 billion rupees, which was coming in since last 2 months, it has gone up to about 70 to 75 billion rupees. So sometimes when you have a situation where too much of liquidity is chasing some of these names and there's a momentum, so there is a retail frenzy, you do go through a little bit of consolidation, but I do not see this as some sort of a warning sign or a sense that this entire index is topped out. Because I think in terms of numbers, in terms of fundamentals, things are looking good, and particularly the PSU names, railway, defense, etc. I think by and large, when you look at the numbers, both in terms of operating profit, order inflow, things are looking okay. So you might go through a bit of a correction, maybe 5%, 10%. Even at the index level, a 10% correction is not too much. But broadly, I don't see much of a concern at this point of time.
Not too much of concern. By the way, Hemang, there was also some talk that I think it was Kotak or somebody who kind of raised margin requirements yesterday. What's been happening at Motilal for retail clients? Has margin requirements, etc., gone up in the last few weeks, days? Just give us a sense.
Prashant, I think given the kind of move which is there in terms of the funding book across brokerage firms is actually rising. When you look at Angel, Motilal, and couple of other retail brokerage firms, the margin funding book has grown anywhere from 20 to 30%. Mainly because of this frenzy, and I do not see a reason for any a concern as such, because the margin funding norms are being implemented, and there is a peak margin norms are in place. So I do not think that the margin part is an issue. But yes, at a brokerage level, if they don't want to exceed a certain exposure to certain category of stocks, that may be their own individual call.
I just had a follow-up to the point we were making earlier about some of these trending sectors doing well. Names like IRFC, IRCON, RVNL, and other railway stocks, they all fell about 10-11% yesterday. Are you advising caution at this point, or do you advise buying the dip?
Sonia, I think we will have to pick our own, bunch of stocks depending upon what kind of work and numbers one is really expecting. And when the stocks have fallen 10%, I think, many of them have actually gone up by anywhere from 50 to maybe 5x, So I think railway as a theme looks interesting when you look at something like a Titagar, IRCON, something like the entire BEML, let's say, the ecosystem kind of play which is there. I don't think there is too much of a concern, but typically because of the high beta nature of these names, you may go through a little bit of, let's say, 2, 3, 4 days kind of a correction of 10, 15%. But I would definitely be looking to add into some of these names.
All right. Hi, Hemang. Good morning. GMR Power, they have won an LOA for a smart metering project worth around 2,500 crores odd. Well, the smart metering theme has really played out very, very well if you got in early. But how do you play it from here on, Hemang? I mean, Genius Power, the stock is re-rated big time. You have a couple of others that have some exposure. GMR Power as well. I think maybe a couple of months or so ago, it was at 23, 24 rupees. Now it's at around 35 rupees, if I'm not mistaken. Your view?
It's another, reform-oriented theme where, because of the kind of pace at which the smart metering projects and the awards are being given to Genius Power and a couple of other companies, there is some sort of, expectation built up. I think the stocks have done pretty well. But what we must understand, Nigel, is that kind of business potential or the opportunity that exists for some of these companies is large. So I think if you go through a small correction here and there, I think Genus Power definitely presents a great opportunity because only about 7 to 8% of the total market, the metering orders have been awarded. So there's a big runway ahead.
Okay, there's a big runway ahead. I also wanted your thoughts on what's happening with the auto sector because, yesterday there was so much talk about, first Nitin Gadkari made some comments about that additional GST on diesel cars and then he sort of said that, no, it's not happening. But give and take everything, if diesel is phased out, if diesel cars are additionally taxed, then one big beneficiary will be Maruti because they have no diesel cars in their portfolio. So definitely, it will be a big boost for them. Any thoughts on how to approach this space now?
Sonia, if you just recollect, maybe a couple of years back, people were a little worried about the disruption that EV could cause to the internal combustion engines. But the fact of the matter is that the typical companies have done exceptionally well, be it Mahindra, Maruti, and some of the two-wheeler companies as well. So I think this whole debate about some sort of additional tax being put or Mr. Nitin Gadkari making a statement that they need to really phase out diesel engines. I think the fact of the matter is that it will take some time and I don't think we should worry too much about it at this point of time. Yes, as a tactical opportunity, whenever you have some extra cess or diesel, maybe it may benefit Maruti to some extent, but broadly, I'm not reading too much into this. I think the auto story in terms of the CV part is playing out extremely well. PV also by and large is doing well. Two-wheeler is where there's a bit of an issue in terms of growth, but overall it looks quite compelling.
Hemang Jani is still with us, so let's get a couple of calls from him. Hemang, there's a new IPO opening today, RR Cable. What are your thoughts on that? Expected to be a good one. It's got a 7% market share, high growth business, over 30% compounded revenue growth in the last 3 years. Would you subscribe to this one?
Yeah, I definitely think so. It's a very good quality wire cable companies with a fair bit of balancing between the domestic market and export, a good amount of market share. And we've all seen how, the growth has been for that category over the last few years. The only thing is that if you have, sentiment which is dampened because of the way we have seen this correction, if this lasts a bit longer and if it's a bit deeper, that could dent the sentiment for the IPOs also. So I think that is something that we should bear in mind. But pure in terms of the business fundamentals and valuations, this is looking quite compelling.
All right, Hemang, what about cement? A couple of price increases have come about. Demand, though, it's a little bit mixed in terms of a feedback that we're getting. Your view on the space, because in East India, we've seen price increases, which is normally unheard in a monsoon season. I think a bigger trend will come in post-October. Your take?
Yeah, so I think Eastern region, we are hearing of about 5 to 7 rupees kind of an increase per bag. And what remains to be seen is that post-monsoon at a broader national level, what kind of price increase happens and what kind of numbers do we see. Overall, we continue to be positive on the space because the worst of the raw material pressure is over, and at the ground you're seeing stability, the construction, the ordering by the government that continues. So I think Ultratech definitely would be the top on the radar, and apart from that, I think some of the mid-cap names, maybe JK Lakshmi, NCL in the small cap, these are the names that we should be keeping on our radar for buying.
So watching out for M&M this morning. Remember, there was a fall that we saw yesterday after certain comments made by Nitin Gadkari talking about the possibility or requesting the finance minister to impose an additional 10% GST on diesel vehicles. Then there was a quick clarification as well, so the stock recovered. But HSBC has put out a note where they have a buy and they've raised their target price on M&M to 1800, which is well above where the current market price is. They talk about how the tractor business is very stable. Despite the deficiency in the monsoon. So, how the tractor business, according to them, has surprised positively this year. However, they see a downside risk to the FY25 tractor growth because of the deficient monsoon. But the traction in the SUV business is something that does continue. They say that the SUV production has been stepped up. If you remember, there were long waiting periods earlier, but now they've stepped up production to meet the demand, and the production has now reached 38,000 units per month. And the stock is not richly valued at the moment, trading at around 16.5 times FY25 core EPS. So let's suppose that question to Hemang. Hemang, at this price of 1,500, 1,550 thereabouts, is the risk reward still favorable for a stock like M&M?
Yeah, surely, Sonia. I think both in terms of SUV, the way the numbers have been exceptionally good. Even the last month, they reported almost about 37,000, which was pretty much, in line with market expectations. The only point is that tractor last monthly numbers were not good. And if you have a bit of an issue in terms of the monsoon progress, then that could be a bit of a sentiment dampener. But overall, in terms of automotive tractor and valuation, I think Mahindra looks quite interesting. And if you see any correction, let's say about 3 to 5% over the next few days, surely it would be a good entry point.
Hemang, final question before we let you go. There are various reports that suggest that Indigo could be hit a little bit by Pratt & Whitney. It's been going on for the last few weeks or so. But clearly the market share gain is something that the street has been very, very excited about. However, this engine issue, you have crude prices that are moving up as well. How much of the good news is in the price? Would you be a buyer?
Nigel, I think this Pratt and Whitney thing has come as a bit of a surprise because currently they do have about 130 A30 Neos, and depending upon how many of these engines are, have some issue and they have to be replaced, the entire thing will depend upon that. We have to bear in mind, Nigel, that this is happening at a time when you are heading into Diwali season and the winter holidays. So if you have a major issue in terms of the engine parts and the company is not able to find some replacement, it could affect the performance, for let's say 1 quarter or so. So that is something that we'll have to bear in mind.